Remember the last lesson that we did regarding the tiers of banks and the tiers of women? My next lesson here, today's lesson is build credit with no credit. How do you build credit with no credit? Well, actually, this is pretty much the secret, okay? And what I mean by no credit, I actually mean cash. You build credit with cash. Because if you have bad credit, perhaps you have cash. I have a lot of clients that hire me because their credit is compromised, but they have lots amounts of cash and they don't know how to build their credit. So this video is for you or people that don't have cash. You definitely need to get cash, because if you don't have cash, if you don't have income, you're not going to be able to build your credit. So if you're broke, then just figure that part out, and then you could still learn how to manage credit. Actually, you should, but before you actually start using it, build your money up first and then have a plan. And this plan is for you. So whether you're 18 just starting out with a thin file means no trade lines or limited trade lines, 3 or less. If you want to get approved for a FHA mortgage loan, then you need at least 3 trade lines and some other requirements. So basically this is how life works. You have a job, either you have a job or you own a business. Both ways you get income from these 2 ways, or you have a job and a business. I know doctors that have a practice and they still work at the hospital. They make like $500,000 doing that. So basically a job person has an hourly wage and a salary, okay? There's a limited amount of 24 hours a day. You can only work 24 hours a day. There's only 24 hours in a day. So you're limited on the time that you can make money. So unless you're in this category, which you have unlimited access to getting clients, which gives you money. So these are the 2 categories of making income, whether you own a business or a job. So if you don't have money, don't have a job, you need to start looking for one, right? If you are not making the amount of money that you want with your job, then the only way to increase your salary or your income is work more or get a raise. Whereas a business owner, all they need to do is get clients. This person might have to, work 200 some extra odd hours. This person can work 2 hours and make the same amount as this person, this job person. So a business person is definitely the one that has access to cash. So if you're a business owner, this video is also for you. And if you have a job, this video is also for you. And if you don't have a job, just get a job, all right? So you have the banks, Bank of America, Chase, US Bank, Amex, and Citi. These are all the big banks. Amex is not a bank, but it's a credit card company. Either way, it's still a good credit card company. And each one of these banks, they have their internal credit reports that you probably are not aware of, okay? So if you're in a situation where you do not have credit, or you have no trade lines or limited trade lines, 3 or less, then what you need to do, you need to leverage the banks. Okay, leverage these banks, build relationships with these banks, okay? This is not a bank, okay? Your income needs to go into these banks, each and every one of them. I would highly suggest building a relationship with these banks, okay? Especially if you have no credit, build your banking history. Your banking history is a fundamental aspect of building your credit. The theme of this video is how to build credit with no credit. Actually, you should build credit with no credit. It's one of the pinnacle parts of it. So, how do these internal credit reports work? There's 6 steps that I wrote, okay? Not necessarily in chronological order, okay? But number 1, don't buy random stuff. These are the red flags of the bank. Don't buy random stuff, all right? Keep all of your transactions, all your expenditures organized, all your payments automated, okay? Use specific debit cards for specific purchases, okay? Have multiple checking accounts and different savings accounts in each one of these banks, okay? Don't put all your eggs in one basket. That's a saying that's gone throughout the years, and it's definitely applicable in credit, and it works. Don't put all your eggs in one basket, all right? Always remember that. Don't buy random stuff, okay? Don't use one bank account for everything, okay? Don't complicate things. Keep all your expenses organized, because the more the bank can understand and predict what you're going to do next, the better your chances are from getting approved for these credit cards. Because How the banks work, they want you to be transparent. The more transparent you are with your income and your expenditures and how you manage your money, the bank is going to trust you more. Think about that. If you were in a relationship with someone and you couldn't trust them, they did these random things, they go on vacation, whenever, they go to these parties, they come home at different odd hours of the night, how could you live with them? How could you build anything with them? They're not predictable. Okay, the same thing with the banks. You want to work with a partner that you understand fully and can work together and grow with. Banks are the same way, all right? So imagine if you had a friend, okay, they had a lot of money and you actually wanted to borrow money from them and you didn't pay them back. How good would that friendship go? Well, your friendship with the banks probably went the same way with the credit cards that you guys defaulted on, the late payments. Imagine being late to paying your friend back that helped you out when you're in a tough situation. Well, that's the moral of the story here. Do not borrow money when you need it, unless you can pay it back. But you shouldn't have to borrow money when you need it, because when you do that, then you really need it and then you won't be able to pay it back. So when you actually have money, that's when you borrow it. Do you get it? Listen to me again. When you actually have money, that's when you borrow it. Then you can pay them back and then you build your credibility, your street record, your whatever. You pay them back on time. And what if the next time you need to borrow money? Your friend's gonna help you out. Okay, so second one, don't overdraft, don't overspend. Banks, look at that. Very, very important. Banks and credit card companies, because where do the credit cards come from? They come from the banks. The best credit cards that exist are from Bank of America, Chase, and Amex, and American Express, and Citi. These are all the big honchos here. I might be forgetting one, but these are the main ones. So in order to get these credit cards that will build your wealth, you need credit cards to build your FICO score. You need available credit. You need this in order to build wealth. You need credit cards in order to build wealth. Okay? Massive wealth. You need credit to get into real estate and all that. That's another topic. So these banks need to know how you manage your money. And this is the blueprint. This is the step. Okay? So don't overspend. Don't overdraft. Okay? If you don't have enough money, don't buy it. You need 6 months of savings. Okay? 6 months of savings. Okay? You need 6 months of savings that basically can pay your rent. If you can pay your rent for 6 months and you keep it in a savings account, you are good. Always have that available every year. Keep that aside, okay? Number 4, get a secured credit card with any one of these banks, okay? With any one of those banks if they offer them. Most of them do, okay? Your secured credit card needs to be $500 to $5K. Whether you're making $45K a year or $120. Basically where I grew up in pretty affluent places like the Bay Area. The average salary is like $90,000. The average home is $1.2 million. So if you're making $45K in that area, you're basically living in poverty. But if you live in a trailer park in Georgia, $45K is like the average salary in like, you know, Ashbourne, Georgia, where a bunch of broke people live, trailer parks. So if you don't live in those neighborhoods, then if you make $120K, you're above average. But if you make $120K in a place like, you know, rural area Georgia, then yeah, you're balling, right? To an extent, you're definitely above average, way above average. So let's go ahead and go to we'll stay on number 4, secured credit cards, okay? You need to get secured credit cards. So if you're making $45K a year, I would recommend you get a $500,000 credit card. If you're making $120K a year, get a $5K one or a $3K one, okay? Now, your usage of your checking account, okay? Your secured credit cards, you're basically, the cash that you put in the bank is basically a credit. You don't own it anymore. That's the business. The bank is in the business of collecting money and then making dividends on it. You paying interest, you paying fees. For all the money that you put in the bank, they're making money on. You need to start leveraging it too, because that's where all the money is. Guess what? Okay? In case you have not already figured this out, the banks have all the money. The banks have all the money. They control all of the real estate, pretty much. If you want to get a home, you have to go through the bank, unless you have cash. But if you're a billionaire already, you don't need to be watching this video. Okay? So secured credit card and your checking account. The money that you have in your checking account, okay, never use more than 9 to 35% of what's in your available checking account balance. That's after you paid all your rent, all your fees, have 6 months of savings, you have a little bit left over for investments and, you know, basic spending. You want money in your checking account, okay? So your secured card that you have, whether it's a $5,000 one or a $500 one, never borrow, never have more than a 9% balance. That's ideal to a 35% balance. That's the maximum you could ever have your credit cards. Rule of thumb, on all of your credit cards, you never exceed a 35% balance, because that high balance gets reported on your credit report and it makes your credit score go down. Okay, and it makes you look more of a risk. So never have it exceed 35%. And when it's 35%, if you do max it out or somewhat high, make sure you pay it down before the closing date of the card. That way you have 2 payments. You pay it down and then you pay your minimum monthly fee every month. There's 2 payments right there. That makes you look really, really good in a lender. Okay, the same thing with your checking account. Never borrow. You know how you won't overdraft? You never borrow more than 9% to 35% of what is available in your checking account. Okay, that's how you don't overdraft. So if you follow these steps, that's going to help you build your internal credit report with the banks. Okay, and over time, you'll be offered higher tier credit cards, because the best credit cards are with these banks. You need to make these banks your friend. You need to leverage these banks and do the right thing. Do not make a missed payment. Okay, do not make a missed payment. Some people have 120K and they get a late payment. They have 3 late payments. Well, that's your damn fault. You can't sit here and get in this game and break the rules and think just because you make a lot of money that the rules don't apply to you. They apply to everyone, okay? They apply to everyone. So get everything automated. Make all your payments automated and don't buy random things, okay? If you're buying random things, you're probably going to overdraft because you don't know what you're spending. You're just spending on random stuff. Keep it all organized. Keep it all organized on the balance sheet. That's good for taxes and that's good for credit worthiness with the banks and transparency, okay? The banks need to see exactly what you do and know what you're going to do next. Become predictable with the banks. So now that you have all of these steps, okay, that's pretty much the foundation of building your credit. So no credit people, follow this. Whether you're making 45K, even 35K is fine. You can get a $500 credit card, a $5,000 secured credit card, and don't borrow more than 9% to 35% at all times. And do that for as long as possible. And that's how you set the foundation for your credit. Then we can work on to the next step. I'll make another video. If you've already passed this, do this for at least 6 to 12 months. Okay? If you haven't done this already, you need to do this. Do this for 6 to 12 months, and when you have done that, exactly what I told you, you may not have to get all these banks. It will be great to get all these banks and put your remaining monies in there. But if you don't, just get one. Get Chase or Bank of America or Citi, okay? Those are really good banks to work with. So, what else? I think that's pretty much it for now. Building credit with no credit. This is the fundamental aspects. Now, you might say, oh, don't put your money in the bank, put it in real estate. Well, this doesn't really apply for people. I mean, yeah, you can do both because you have to go to the bank to get loans anyway. And sometimes these mainstream banks can get better deals than mortgage brokers, okay? That buy notes from Wall Street, buy notes from different banks and sell to Wall Street back and forth, all this stuff. So it's good to work with these different banks because one bank might have a promotion better than the other, okay? Rule of 5, have 5 banks with you, have 5 credit cards, have 50, okay? Don't put all your eggs in one basket. You want to be able to be competitive, have a competitive edge. If you're just working with one bank, you're limited, okay? You need to work your way up. If this takes long for you, if this takes a year, if this takes 3 years, then do it because the longer you wait, you don't have your priorities straight. You need to focus on this. You need to build your foundation first and change your spending habits, change your buying habits, change your savings habits, okay? And check on your credit usage. Keep those in check. Become a different person on paper. Okay? I can remove some negative items from your your credit report, but what's that going to do if you keep on making the same mistakes over and over? So this is something that everyone can do right now, whether you have bad credit or no credit. Whether you have bad credit or no credit, you can do this. So there's no excuse. Once you've seen this video, I would highly recommend that you do this. Okay? So guys, that's it for today's lesson. Like, comment, share, subscribe. Comment below if you have any questions, and I'll see you on the next one.